Today, we're diving into a topic that can significantly impact your financial well-being. Secret tax tips that can help you save money and maximize your returns. Many people overlook the power of effective tax strategies, but understanding these can make a world of difference in your financial landscape. In this video, we'll cover a range of insider tips that can help you navigate the often complex world of taxes. From deductions you might not know about to credits that could put cash back in your pocket, we'll explore practical strategies that anyone can implement. We'll also discuss the importance of planning ahead and staying informed about tax laws that can affect your finances. By the end of this video, you'll have a clearer understanding of how to leverage these tips to your advantage. Whether you're a seasoned taxpayer or just starting out, these insights can empower you to make smarter financial decisions. So, stick around as we unlock the secrets to tax savings that could benefit you financially. Understanding tax deductions. Tax deductions can significantly reduce your taxable income, making it essential to know what's available to you. For individuals, common deductions include mortgage interest, which can provide substantial savings for homeowners, and medical expenses that exceed a certain percentage of your income. These deductions can help lighten your tax burden and improve your financial situation. However, there are also lesser-known deductions that can be equally beneficial. For instance, educators can deduct out-of-pocket expenses for classroom supplies, while individuals repaying student loans can deduct a portion of the interest paid. These hidden gems can add up, so it's crucial to be aware of them. To truly maximize your deductions, maintaining accurate records is vital. Keeping track of receipts, invoices, and relevant documents throughout the year can make the tax filing process smoother and ensure you don't miss out on any potential savings. By understanding the various types of deductions available and staying organized, you can take full advantage of the tax benefits that apply to you, ultimately enhancing your financial well-being. Tax credits versus deductions. Understanding the difference between tax credits and tax deductions is crucial for optimizing your tax strategy. Tax credits are direct reductions in the amount of tax you owe, meaning they can significantly lower your tax bill. For example, the Earned Income Tax Credit, EITC, is designed to benefit low to moderate income workers, providing a substantial credit that can lead to a refund even if you owe no taxes. On the other hand, tax deductions reduce your taxable income, which in turn lowers the amount of tax you owe. For instance, if you have a deduction of $1,000 and your tax rate is 20%, you save $200 in taxes. While both credits and deductions can save you money, credits are generally more advantageous because they directly reduce your tax liability. We encourage you to explore the various tax credits available to you, as they can significantly lower your tax bills. From education credits to energy-efficient home credits, there are numerous opportunities to save. By understanding these differences, you can make informed decisions that enhance your financial situation come tax season. Retirement accounts and tax benefits. Retirement accounts are not just a way to save for the future. They also offer significant tax advantages that can enhance your financial strategy. Contributing to accounts like 401ks and individual retirement accounts, IRAs, allows you to reduce your taxable income. For instance, contributions to a traditional 401k are made pre-tax, meaning you won't pay taxes on that income until you withdraw it in retirement. Similarly, traditional IRAs provide tax deductions for contributions, further lowering your taxable income. One of the most compelling benefits of these accounts is tax-deferred growth. This means that your investments can grow without being taxed until you take distributions, allowing your money to compound over time. Additionally, certain accounts, like Roth IRAs, offer the potential for tax-free withdrawals in retirement, providing a strategic advantage for long-term planning. To maximize these tax benefits, it's crucial to start contributing early. The sooner you begin, the more time your investments have to grow, and the greater your potential tax savings can be. By taking advantage of retirement accounts, you're not only securing your future but also optimizing your current tax situation. The importance of tax planning. Proactive tax planning is essential for managing your finances effectively throughout the year. By estimating your tax liabilities early, you can make informed decisions that help you avoid surprises when tax season arrives. One effective strategy is to regularly review your income and expenses, allowing you to adjust your withholdings accordingly. This ensures that you're not overpaying or underpaying your taxes, which can lead to penalties or unexpected bills. Consulting with tax professionals can also provide personalized advice tailored to your unique financial situation. They can help you identify potential deductions and credits you may not be aware of, as well as guide you on the best strategies for minimizing your tax burden. Planning ahead not only alleviates stress during tax season but also empowers you to take control of your financial future. By being proactive, you can make adjustments throughout the year that align with your financial goals. This approach not only helps you stay compliant with tax laws but also maximizes your savings, allowing you to focus on what truly matters, building your wealth and achieving your financial aspirations. Common tax mistakes to avoid. Navigating the world of taxes can be tricky, and making mistakes can lead to penalties or missed savings. One common error is failing to report all sources of income. Whether it's freelance work, side gigs, or interest from savings accounts, every dollar counts and should be included on your tax return. Missing deadlines is another frequent pitfall. Late filings can result in hefty penalties and interest charges, so it's crucial to stay organized and submit your returns on time. Double-checking the information on your tax returns is essential. Simple mistakes, such as incorrect Social Security numbers or miscalculating deductions, can cause delays or trigger audits. Taking the time to review your return can save you from unnecessary headaches down the line. Additionally, staying informed about changes in tax laws is vital. Tax regulations can shift from year to year, and being unaware of these changes can lead to costly errors. By keeping yourself updated and being diligent in your tax preparation, you can avoid these common mistakes. In this video, we've explored the essential aspects of tax deductions, credits, and the importance of proactive tax planning. Understanding these elements is crucial for optimizing your tax strategy and ensuring you're making the most of your financial opportunities. Remember, tax deductions can lower your taxable income, while tax credits directly reduce the amount you owe. Additionally, planning ahead can help you avoid surprises during tax season and maximize your savings. By implementing these strategies, you can navigate the complexities of taxes with confidence and potentially save a significant amount of money. If you found this information helpful, we encourage you to subscribe to our channel for more valuable tax tips and financial insights. Don't forget to like this video and share it with friends and family who could benefit from these strategies. Thank you for watching, and we look forward to seeing you in our next video.